What's going on, guys? Welcome back to the channel. So this is going to be a video on risk management, okay? We talked about me shifting the channel a little bit further over to risk management because I believe, been trading 4 years now, been profitable for 2. I believe risk management is, if you're not making money consistently, that's what you're missing. That is what you're missing, is risk management. It's not strategy. You know, it's nothing else. It's risk management, okay? So, been promising more videos on risk management and how I think of risk and how I can manage the trade. Entering a trade is easy. Exiting a trade is easy. The difficulty comes in the management of the trade. Okay, that's just how it is. So, you're going to get the most out of this video if you're honest with yourself and if you participate. All right, it's going to kind of be interactive. So, what you see on the screen here is I want you to take a minute, 30 seconds, whatever, and I want you to define all of these things for yourself. And then I'm going to fill them out for myself, and then we're going to go to a spreadsheet and show you how it all comes together, okay? So take a minute, do that, pause the video, whatever. Take some time to think about this and be honest with yourself. You're going to get the most out of this if you're honest with yourself. So what's your risk per trade? What's your risk per day? What's your risk per week? What is a lot of money to you? And when I say that, I'm not being like facetious. Like $200, $300 is not a lot of money to me. I'm just being honest. A lot of money to me, probably $350. Probably, you know, after the $350, $400 mark, that's really considered a lot of money to me. Why is it a lot of money to me? Because I can probably pay a bill with it, right? I can pay my car payment, or I can, you know, I can do something with it. You know what I mean? So you ever in a trade and you're down money and it's going against you and you're just like and then you freeze up, and by the time you come to, you've lost maybe $1,500, $1,600, and you're like, oh my God. And then all of the things you could have did with that money, instead of staying in that stupid trade, all of the things you could have done come flooding into your brain. Does that ever happen to you guys? You're just like, oh my God, I could have paid my car note for 3 months. I could have paid rent, whatever it is. You know what I mean? So I want you to think about what's a lot of money to you. All right? And then I want you to think about, at what point do you move your stop to break even? Okay? At what dollar amount do you move your stop to break even? So say you're risking a certain amount, the trade starts to go your way. At what dollar amount do you say, okay, I might not win, this might not make it to my profit target, but at least it won't turn into a loss. Let me get to break even plus commissions. What dollar amount is that? For some people, it's $100. You know, for some, it's all going to be depending on what your risk per trade is. And then I want you to think about what your profit target is on these trades. Do you trade 1-to-1s, 1-to-2s, 1-to-3s? I have a friend that trades 1-to-6s. 1-to-6s, guys, meaning he risks 1 unit to win 6, and he's profitable. He's hella profitable because he only takes trades that give him a 1-to-6 potential, and because of that, he can lose a lot more. He can be wrong a lot more and still be profitable. So then I want you to, and if all of this stuff, guys, what's important about this, all this stuff you should know. All this stuff on this screen, you should know as a trader, okay? You should know it from journaling. You should know it from keeping your own stats. You should know these things. If you don't know these things, this video probably is going to be lost on you. All right, it's probably going to be lost on you because you're not serious about trading. And I'm sorry, it's just the harsh truth. If you don't know these stats about the activity that you're engaging in, one of the hardest things to do on planet Earth is trade financial markets, and you're not keeping information about it, you're not trying to improve, you're not, you know, going over your numbers, you're just not serious. You're not serious, or you think that you can somehow do this successfully long term without knowing all this stuff. And you just can't. You can't. And I have tons of videos on my channel about how journaling changed how I trade. It changed the way I look at this. You have to journal and you have to know this stuff. So off my soapbox on that. But what do you think your win rate is? If you look at your last week, look at your last month, look at your last quarter. What is your win rate? I use Tradevate, my broker, Tradevate for futures. I can, pull up a report really quick and it'll tell me how many trades am I winning. Okay, so I'm going to fill these out for me now. All right, and I'm going to, then we're going to go to the sheet. But by now, you should have a pretty good idea of the information that you need to have to participate in the video. And we're going to see how it plays out with my information. Afterwards, the spreadsheet that I'm using will be available in the description below. So you can go and download it, play with it on your own time. All right, so risk per trade. Right now, I'm risking about $140 per trade. Let's make this green. Okay, I'm risking about $140 per trade. Okay, risk per day. I have about a 3 trade. Well, it's not about. It's exactly a 3 trade limit. So that takes this times 3. Okay, so that makes my risk per day 420. Okay, for the week. So if I lose 420 for the day, I'm done. My broker locks me out of the account and I'm done. If I lose more than 3 trades in a week, or I'm sorry, if I have more than 3 losing days, which is a majority of the week, because there's only 5 trading days in a week, if I lose 3 of those, I've lost 60% of my trades, right? That's going to come down to about $12.60 a week. Okay, now, let me just make sure the numbers are right here. Yeah. Okay. So now I have my weekly limit, I have my daily limit, and I have my loss per trade. Okay. This is all to me. Okay. Yours will be different. All right. What's a lot of money to me? We've already discussed that. I'd say a lot of money to me is around 3. I say I start to, this is the reason I want you to define what's a lot of money to you. In a trade, as the trade is going your way, okay, and it's looking great, it's looking good, you picked it finally, and it's going your way. In those trades, guys, those are the trades that you have to manage the best, okay? Because we all get to a point in profit where we're like, I have to take this profit. Because you're looking at the dollar amount, because it's a lot of money to you, and you're not looking at the chart, okay? You're not looking at, that price should if it's going up, that it's probably going to break this new high. It's probably going to break an old high, or it's probably it's probably in a blank space on the chart where it could just run and run and run because there's no barriers to it, right? You're probably not thinking about the technical analysis part of your trade. You're probably just thinking about the money, all right? And that's the problem, because these trades, these types of trades where you get up and you're up a lot of money, those are the hardest trades to manage, because there's constantly this tug of war. Like, you're thinking about all the things you can do with this money, and you're so happy to have this trader. Maybe you're coming from, maybe I'm coming from a day where I lost 3 and I hit my daily stop of 420. 350 is looking pretty good to me right now, right? Because now I'm only $70 away from undoing the day before, right? But you have to be aware of that, and the purpose of this video is to put the math on your side so that you can just focus on trading, okay? Because if you don't know what you're doing with the math, and it turns out the math is not jiving, you're never going to be profitable. It's never going to work out, okay? So, break-even dollar amount, that's pretty easy for me. My break-even dollar amount is usually my initial stop, plus 10, 20%, okay? So my initial stop's 140. When the profit to me moves to 140, okay, it shouldn't turn into a loss, okay? Because now, if you think about it, I'm now risking 280, the 140 I have in profit, plus my 140 of initial profit to win whatever, okay? So now, whatever I'm going after, it's kind of been flipped, right? My risk management has been turned upside down, okay? So I really want to keep my risk management pretty solid. So after about 140 plus 10, 20%. So let's say, what's 20% of 140? Well, 10% is 14, so 20% is 28. So 140 plus 28, let's round the 28 to 30. So let's say 170. Let's say when I go to 170, which is 140 times 20, or plus 20%. When I get to 170, I'm moving my stop to break even plus commissions. Okay, so I'm putting my stop to an area on the chart where if it does come back and stops me out, the trade's gonna be paid for commission wise, so I'm not gonna lose money in commissions. And I'm probably, I'm gonna make a couple bucks. Like, it's not gonna be. But the key to this is when you think about your break even amount, it has to make sense mathematically also. Okay? It has to make sense. Now, a break even trade does not hurt you financially and mathematically. It actually helps you mathematically, but it might hurt you psychologically. And when you're trading, you have to guard your psychology, okay? If you got a bunch of trades that went in your favor and came back to break even and stopped you out, you're not going to be trading too well. You're going to be chasing them, or when it gets up to that amount again, you're going to be taking those profits, okay? Because you realize that every time it gets up to this, it turns around and knocks me out. There have been days I've been trading lately where my profit target was, let's say, 300, 400 on a trade. It'll get to like 250, and I'll be at break even by then. But it'll get to like 200 or 250, and it'll turn around and come back and stop me out. And that's happened multiple times over the course of the day. What that tells me is that the market was only willing to give me $200 a trade today. Okay, and I have to be open. I have to realize that, okay, if the market's only willing to give me that much profit, then my risk has to come down. Okay, I shouldn't be going in with full size because the market's not rushing to my profit target. Maybe it's a range day that I'm not picking up on. Whatever the case is, when you have a lot of small profits, you move to break even, boom, stopped out. Move to break even, boom, stopped out. You have to think about, what is the market trying to tell you? Okay, if it's not giving you 8-point moves and it's only giving you 3 and 4-point moves, you have to take those. Okay, but that comes with experience. That's not what this is about. But your risk per trade has to come down when the market is being stingy. Okay, because your reward is lower. So your risk has to be lower because your reward is lower. So your profit target. My profit target is typically a 2.5 to 1. Okay. So 2.5 to 1. Let's go 140 times 2.5. About 350. And that lines up with pretty much what money is to me. What a large amount of money is to me. Okay. So let's go 350. And my win rate. I can say my win rate over the past week, it was actually pretty high last week. It was in the upper 70s, but that does not happen often. Typically, my win rate is in the mid 50s to low 60s. Okay, so we're gonna go in the middle. We're gonna say I have a 58% win rate. Okay, so now that I have all of this information, okay, you should be familiar with how to calculate your expectancy. And your expectancy is, if I took so many trades with these parameters right here, what can I expect to make on average each trade? Okay, so you're gonna lose, say you got a 50% win rate, you're gonna lose 50, you're gonna win 50, you got a 2 to 1 win rate. Let's just go to the calculator and show you how you calculate it. So how you do it is you take what your loss is gonna be, okay? For instance, my loss is going to be 140 per trade, okay? And you take what your win is going to be, because you're taking two outcomes, okay? The one outcome is the loss, the other outcome is the win. Okay, don't worry about the break-even outcome for this example. You take your loss, you take your win, you add them together, okay? Add them together because they are the two outcomes. So 140 plus 350, I have 490, okay? Then you take your one outcome, your loss, and you divide it by both outcomes, okay? So I'm taking the 140 and I'm dividing it by 490 to get the win rate that I need to break even, all right? So I need to win 28% of the time, okay? I need to win more than 28.5% of the time to break even, all right? So let's take this 28.5% win rate that I need to have. Okay, let's bump it up to, let's just say 29%. Let's just go 0.5% up, right? So let's say 29%. What is my win when I win? Well, it's 350. So 29 times 350. What is that? 29 times 350 equals 10,150. Okay? 10,150. So if I'm winning 29% of the time, that means I'm losing 71% of the time, right? So out of 100 trades, I'm losing 71 of those trades. 71 plus 29 is 100. That's going to be your 100%. So I'm losing 71% of the time. And when I lose, I know I'm only losing 140. What does that equal? 140 times 71. 9940. 9940. Okay? So out of that, if I take this 10,150 that I win when I win the 29 times, and I minus the 10,150 from my win, it leaves me 210. Okay, so just winning 0.5% more of the time, okay, I'm profitable at $210 of profit. So my expectancy then over 100 trades is basically this 210 divided by 100. Okay, because I've taken 100 trades, I'm up $210. So my positive expectancy is $210 per, or $2.10 per trade. Okay, that's my expectancy. So if I know this, that's my expectancy with this right here. But this is not my win rate. My win rate is 58%. It's higher than this. Okay. So I know I'm going to be profitable if I have a strategy that hits 58% of the time. If it hits anything more than 30% of the time, I know I'm profitable. You know what that does for your psychology when you know your numbers, when you know that that is how it is, when you know that, okay, I'm going to take this trade. I don't know if it's going to win. I don't know if it's going to lose, but I'm going to manage it the proper way. And if I take 100 of these or after 10 of these or after, in the long run, at the end of the year, I'm going to have a green year. And all it then becomes is a numbers game. When you add to the account, this 140 goes to 150, and then it goes to 160, 170. Your risk units keep going up because your account's getting bigger. And because you know your strategy has a decent win rate, and even if it's terrible, it's not as bad on its worst day as 30%, you're going to keep making money. Okay? You're going to keep making money. Your job is to just win. Your job is to just win 29% of your trades. Okay? You can usually throw a dart or flip a coin and go long or short and win that. I'm serious, you can. Okay? So, let's take all of these numbers. You should know all these numbers. Okay? And we're going to take these numbers to this spreadsheet here. All right? So, my numbers are plugged into this spreadsheet. This is the win rate, or this is the risk amount. Let me add some rows up here. This is the risk amount, say risk dollar. This is the profit target, okay? This is the win rate for break even. Okay, that's the win weight. This is the win rate for break even. Okay? And the same is going to apply to this over here. Just paste that there. And that's the win rate for break even. Okay? And this is the change in percentage. That's important too. Okay. So, now that we have all that information, we can put together math that makes sense. Okay? And you can see how your decisions in the trade influence whether you're going to be profitable or not in the long run. So if you have a $140 win rate, if you win $140, you only have to win 50% of the time to break even. Okay? So 50-50, every other trade, or out of 10 trades, you win 5, you lose 5, you're going to break even, right? We're trying to profit. So if you're doing a 1-to-1, you have to win 50% of the time. This is the thing about risk reward. The lower your reward, the more pressure you put on your trading to be just spot on. Okay? And when you enter, the market has to go in your direction. Okay? And you have to win a high number of trades because you're risking so little. All right? So this is 140. This is about 7 points when I trade 4 micros. Okay? So 4 micros, $5 a point. So it's $20 a point. Okay. So I don't need more than a 7-point stop. I've tried trading with a 5-point stop, a 3-point stop, a 2-point stop. That I can trade the E-mini when I do that. But to be honest, I'm not that like precise. Like I have an area where I think something's gonna happen, and I want to get in at this area. Okay, so I need a little more room, and that's just the way I trade. I played with it enough to know that between 7 and 10 points, I need that stop to kind of manage my trade. Okay, whether I'm going to be scaling in, I'm not saying I'm buying all 4 contracts at once. I might buy one, it falls 2 points, I'll add another, it falls another 3 points, I'll add another. So now I've got 6 points of risk in the trade, but I've only done half of my stop on half of my position. Okay, so now I can either let that half ride all the way down to a larger stop, right, a larger area of the chart, or I could cut it, or I could wait till it comes back into profit and add those other 2 in. So there's tons of ways to do that, and that'll be another video. Let me know if you guys want to see that. But okay, so 140. If I win 140 when I lose 140, I now have a win rate of 50%. I have to win 50% of the time to break even, and actually a little bit more to count for commissions. Okay, but here's what happens if remember, every point for me is $20. Here's what happens if I wait for another point. Okay, I win 160, still risking the 140. Okay, now I don't have to win. Excuse me, I don't have to win 50% of the time. Now I can win 46% of the time and be profitable. Look at the change as a 3% change in win rate. Okay, just holding on for one more point. All right, look at this one here. The win rate for the next point, now it's 43%. It's almost another 3%. If I win another point, if I hold on till I have $200, now I only have to win 40% of the time, meaning I can lose 60 out of 100 trades, win 40 of them, 41% of them, and I'm still at break even. And then as it goes down, you see it continues to increase. It continues to increase the win rate, which is decreasing the amount of accuracy, the amount of pressure that I'm putting on my winning trades. Okay? What I wanted you to see here, why I wanted to calculate the percentage of change, is there is a time in the math where it's kind of like a diminishing return to continue to hold the trade and continue to squeeze more and more out of it. Okay? And for me, it's around 35%. Okay? It's really around 30%. Which is why my profit target is 50 or 350. But for this example, we're going to go with 35%. So I have to win 35% of the trade if I hold my trades to 260. Okay, that's basically one every 3 trades that I have to win. Okay, since I'm up around 58%, I'm always going to be profitable with this strategy. Okay, I'm always going to be profitable. Now, it doesn't account for the losses in a row that I might take, but very rare that I hit my weekly limit, that I lose, I lose 3 one day, I lose 3 the next day, I lose 3 the next day, and then I'm done for the week. That very rarely happens. I think it's since I started doing this, I've probably done this over 6 months. It happened once. It happened one time. And actually happened all in one trade because I didn't have my stop loss put in because I'm a dumbass. So it's one of those things where as the trade starts to go your way, this helps you with knowing that, okay, my win rate is this. Every time I get into a trade, I need to manage to break even or I need to take my win rate. No matter what, because if I don't, it does not matter how good of a trader I think I am, the math is against me and the math is going to win in the long run, okay? So as you're sitting there and the trade's going your way, so I get there, the trade, let's go back to the paint here. See if we can expand this a little bit, get a little more room at the bottom. Okay, so I buy here. Okay, the trade starts to go my way right here. Okay, my stop was initially down here. My stop was initially down here, $140 away. The trade starts to go my way. Okay, as we talked about, it goes my way. And right here, I decide to move this stop up to break even plus commissions. Okay? So now I'm at break even plus commissions. My profit target, however, let's do this. Okay, my profit target is up here. My profit target is up here, okay, in this green somewhere. Let's just call this the profit target here. So the PT is up here. So my profit target's up here, but I'm already at break even. Okay, as the trade is moving in my direction, I know that based on this math that I've calculated for myself, that I can't take profits until at least 260. Now here's the thing. My win rate is decent enough that I could even take profits at 140. Okay? Because I only have to win 50% of the time to break even. So if I'm shooting 58%, I'm going to break even, right? Or I'm going to be better than break even. I'm going to be profitable. But I know that I'm not always at 58%. That's an average of my win rate. Like I said, sometimes it's in the 70s, sometimes it's in the high 30s. Sometimes I can't win. Sometimes it's 0% a day. I lose every trade. That win rate is 0%. But on average, over the course of many trades, which is how you should be thinking, not in one trade or 10, you should be thinking over many trades, I'm going to hit about 58% win rate. So I want to put the pressure on the profitable trades to pay me. Okay? So 260 is where I think about getting out. But look, this is why I picked 260. Look at how for every point of profit that I take, every point of profit that I hold on for after break even, look how it gives me. It takes the win rate, my edge up, the 3%, 3%, 2.5%, 2.2%, 2%. When it falls below 1% or 2%, that to me is where the diminishing returns start to happen. Because as you can see, it's not really worth it, okay, to really hold on that much. But by now, since a lot of money to me is 350, by the time it gets to here, I've already added on most of the time. You know, if we go back to this example here, we go back to this example right here. Okay, if this is when it got to here, I moved my stop up, and let's say that it started to retrace a little bit. It came back down, okay? When it goes back, if it comes back and doesn't hit my stop, great. But as it goes back up, once it retraces about half of this move, 60% of this move, I'm adding on, okay? I'm adding on one contract. So chances are by the time I get to this area of the chart, I'm going to be around my 350 profit target, okay? Or I don't add, and I just let it continue into my profit. Okay, but that's another video. That's just trade management. But this, for each point that you get, okay, look at how it takes pressure off of your win rate. You can now win 3% less, 3% less, 2% less, 2%, 2%. And then when it gets under 2%, that's really where you diminish the return, okay? Now let's go the other way, okay? Let's talk about when you have a trade, and this is why it's important to know what's a lot of money to you, okay? Because if you're losing, if you're in a losing day, if I've lost 2 trades, right? And so now I'm down 280 for the day. And then the third trade goes into profit 140. Now I'm up 140, and my brain's going to tell me, okay, you're basically back to only losing 1 trade. You should take profit. I want to do that because I'm putting pressure on myself to be right 50% of the time. Okay, at least. So as it ticks up, I'm putting less pressure on the win rate. Okay, I'm putting less pressure on my trading. So let's say now it goes to 280. Okay, now my brain's screaming at me, oh my God, take this profit. You're even for the day. You've lost 2 trades, you won 1, you're even. Okay, you've broken even on the day. You've put pressure now on this trade to be right 33% of the time. Okay, you're right 58% of the time, so it's a good trade, right? And that would be okay. A 2-to-1 would be okay with my win rate. But this is what happens when you don't, you're taking 50 and 60 and $90 wins. Look at how much pressure it puts on your win rate in the opposite direction. So this is where you start out here, just like here. You're winning 130, break even. As you accept less and less profit, and we've done this in $10 increments, you accept 130 now. Well, now you got to win. You got to win almost 2% more to break even. You accept 120 when your loss is 140. Well, over time, you've got to win 2% more now to break even. 2% on top of the other 2%. 110, 2%. 100, 2.3. Or $90, 2.5. By the time you get to $60, okay, you're so upside down in your math, you got to win 70% of your trades just to break even. So that means to be profitable, you got to win more than 70%. Why do you put that much pressure on your, thinking of poker, why do you put that much pressure on your hand, on your trade to win? You shouldn't. You shouldn't do that. You should be over here, and you should know that, okay, when it moves to 140, 160, whatever, I'm going to move to break even, so I can't lose on the trade. Then I'm going to sit on my hands, literally, and I've done this. I sit on my hands, so I'm not touching the keyboard. My stops are in, my profit target is in, and I just watch the market. And it'll either it'll stop me out at break even, or it'll go to my profit. But I'm not going to try to dilly-dally with the trade. Okay, I'm not going to move my stop around. I'm not going to try to do that because I know as soon as I start accepting less, especially less than my risk, I'm putting too much mathematical pressure on my trading to be profitable long term. Okay? So, hope you understand that part of it. I'm going to take it one step further, then we're going to end the video. If you are managing your win rate and your risk reward trade by trade, you're going to get this part automatically. I'm sorry, you're not going to get this part automatically. Okay? You'll be profitable, but we're just going to take it a step further. You'll see what I mean. So let's say that instead of I take my max loss for the week, which remember is 1260. Okay, it's 1260 because I've lost 423 times, and then I'm taking 2 days off, and maybe I don't lose it. Maybe I lose Monday. And then I sulk and I take Tuesday off and I just watch the market. And I come back Wednesday and then I lose again. And then I'll take Thursday off and then I want to trade Friday. It doesn't have to be back to back to back. But that's the max limit. That's the max loss, right? So, but coming back here. So, I've lost my max loss in a week. Okay? And the next week I start to trade. That week's loss is still on my mind. Obviously, it's still in my mind, right? So what happens when you go into the next week? You go into the next week, you have to, say you have a good week. The market's easier to read, or you learn from what you did last week and you have a good week. Now you're winning trades. You're winning trade after trade after trade. You're really, you're doing really good. And at the halfway point of the week, let's say you're up 1260. Well, if you're losing 1260 on a week that you lose, and you're winning 1260 on a week that you win, you're in the same scenario up here. You had a 50% win rate. But this is weekly. Okay, this is a weekly win rate. Okay? How many of you won't even get there? How many of you will have a bad week where you hit your max loss, and then the next week you'll win, say, half of your max loss of the last week, and then you'll quit. You'll quit trading for the week. That's the worst thing you can do when you're up, because if the market's easy to read, if the market is giving you, the right signals and you're plugged in, you're dialed in, you need to be pushing those winning trades, okay? You need to be pushing that winning week to get it above your average losing week, okay? Because if you lose 1260 and lose 1260, and then on a week you finally win 700, you're like, oh, thank God, I finally had a profitable week. Let me stop before I give it back. You're stopping at a time where everything's in your favor. You're up money, so you have more risk units to play with. You are reading the markets well, obviously, because you're profitable for the week, okay? Why are you stopping at 670? And if you see here, if you lost 1260 one week and you won 670 the other week, you now have to win 62.8% of the weeks in the year to be profitable. That's a lot of pressure. That's a lot of pressure to put on yourself to win. You have to win more than 62% of the time. But if you start to push your trading when you're up 760, you push your trading to your last week. Okay, good. Most people would stop there. Okay, I only want to win 50% of the weeks. I don't know about you. There's 52 weeks in a year. I don't want to lose 20. I don't want to have to win 26% of the weeks. Okay? I don't want to lose half of the weeks either. But I want to put the math on my side in the macro context over the course of a year so that I'm profitable. So I'm going to push it a little bit. And when I say push it, guys, I'm not trying to force the market to give me more than it's willing to give me, like we talked about earlier in the video. I'm just trying to capitalize on my edge. I'm obviously reading the markets well because I'm up this week. Okay? I have money to play with. So at the very least, I'm going to break even this week because if I lose this 1260, I'm done, right? So I push the trade a little bit. I go for another one. I wait for high probability setups. I go for another. I try to push my win rate for the week up so that I can stomach these weeks a little bit better. So say I can push a $1,200 week to, let's be realistic, let's say a $1,700 week. Now, out of 52 weeks in a year, I only have to win 41% of the time to be profitable. So we got 52 times 40. I got to win 20 weeks to be profitable. So if I can win now 50% of the weeks, let's do the math on that real quick. Put this down here. Move this down. Okay, so let's say that I really win 50% of the time, okay? But I have a win rate. These are my numbers that I use. So I take the 1760 and I multiply it by 50. Okay, that's going to leave me $88,000, okay? Then I take the 1260 and I multiply it by 50. Okay, it's going to leave me $66,000. So I lost $66,000 over the course of the year, but I made $88,000 for a net profit of $25,000, okay? And it's because I kept in mind on a bad week when I'm not doing well, when I'm not reading the markets well, I stop out, I take my loss, I sit and I wait. On a good week where the market's just going in one direction, or it's very easy to read, or it's approaching a level you've been waiting on, that is the week that you have to push your trading over the limit, because you have to be able to withstand this kind of drawdown. Okay? And in order to do that over the long term, you have to have a win rate. You have to have a hit rate that is significantly higher than the one that you need. Okay, does that make sense? I play poker a lot, and I'm in the video on this. I play poker a lot. I'm pretty good at it. I went last month about 17 times, and I won 15 of 17 times. Okay, I sit down at the table with 300. When I have 900 to 1,000, I leave. That's my strategy. That's my risk management. I can only lose 300. It's a lot of money to me, right? I can only lose 300, but at 700 or at 600, I tend to get up and leave. A couple of times, though, last time, the table was really good. I mean, there was just fish swimming everywhere. Fish is someone that just calls everything. So the table was really good. I had the chip lead. I had money to play with, and I had more money than the 600. I think I won a big pot. I went up like $1,000, right? So I had like $400 to play with. I could lose $400 and still be at plus 600, basically. So I pushed it. I pushed my trading. I started pushing the table. And they were already pretty mad at me because I was playing well and I was getting lucky. And it's terrible to be on the other side of that, okay? When you're playing well and you're lucky, it's the worst for your opponents. So that day I was playing well and I was lucky. So I was pushing it. And I had a read on my opponents, right? So I pushed that winning day. I think I pushed it to $2,000. So I walked in with 300. I walked out with almost 2,300. It's like 2217 or something like that. That day is huge for me because now I can go and lose. I'm not concerned about going broke playing poker because I know now I can lose 350 a bunch more times, okay? Because my average win is higher than my average loss. It's already higher if I'm winning 600, but that really blew it out of the water. That's like a That was like a 5, 6 to 1, 7 to 1, right? So if I have those days here and there, I can take that extra profit and divide it into my other days. So I'll give you an example. My extra profit on that day, if I walked out with let's say 2,200, and I came in with 300, and I wanted to make 600, okay, extra profit of 1,300. So if I've already traded 10 days, or not traded, I've already played poker for, let's say, the last 5 days, and I've won or lost, I add that to my winning, divided by 5. Now I can add $260 to my win rate in poker per day because I had that one big day. Look what that does for me as far as win rate goes. So 300, right? Plus, that's how much I risk at the table, plus 600, okay, is 900. 300 divided by 900 is 33%. So if I can go into a poker room and win one out of every, or two, if I can go in and win, really one out of every 3 days, give or take, I can continue to play poker. And, my spouse won't tell me I have a gambling problem. So if I can do that, but then I can add, so I got the 900 and I can add 260 to it, okay? Because that was my win rate, or that was the extra profit because I really pushed my winning day. Now I divide the 300 by 1160. 300 divided by 1160. My win rate is able to go down to 25%, almost 26%. So I went from a 1 to 3 to a 1 to 4. Okay? Pretty much 1 to 4. So now I only have to win 1 out of 4 days to be profitable instead of 1 out of 3. Okay? Because when I was up on those days, I pushed my winning rate. I pushed my cards. I pushed my trade up to be profitable for the week. Okay? So I hope this video helped. Please comment, like, subscribe, all that good stuff. Let me know if it helped you. This will be in the description below, so you can kind of plug in your own numbers and play along with it. But, guys, the rant I had at the beginning about the journaling and knowing these numbers, you're running a business, okay? Whether you think it or not, you're running a business when you trade, okay? You would never buy something to sell to a customer that cost you more to buy. So why do you do it with your trading? Why do you risk 140 and then take a profit, start to take a profit of $100? If you are taking a profit of $100, what you're saying to yourself is that your $100 profit is a lot of money to you. So if your $100 profit is a lot of money to you, and every time you see $100 flashing on you at the screen, you just overload and you just take profits. Oh my God, I got to take this profit. That is a signal to you that you're trading too big. Okay? That is a signal to you that you should probably drop your size down. Because if $100 is a lot of money to you and you're risking $140 in a trade, every time you lose $140, your psychology's gone. It's gone. Because $100 was a lot to you. $140, anything more than that threshold is a lot of money. So you need to be sizing your risk units to where when you lose, just like, I've got 200 more of those trades. I could lose 140 right now, 200 more times before I'm out of the game, right? That is the key to this. You want to get inside your head and see. And these numbers will change as your account grows, as your experience grows, as you get more comfortable in the market. These numbers will move up. They will get higher. Where 140, that's where I'm at right now. By the end of the year, I expect that number to be 400. Okay? So when $400 is a lot of money to me, all of this changes. All of the numbers change. But it's still staying germane to what my account size is and what I can tolerate mentally. I'm guarding my psychology with each and every trade. All right? All right, guys. Nice talking to you. I will see you in the next one. Peace.